Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 12th of March, Wednesday, and it has been a fairly okay day in the markets. The markets surprisingly fell down. My expectation was that, at least yesterday, was that the markets might see a rally, but I think that will have to wait for some time. And my reason for stating that yesterday was two, three things. One, the way markets had rebounded yesterday, and secondly, the US markets, the US futures were very strong. But then suddenly announcements came in US of 50% tariff, and suddenly the US markets tanked big time, and along with that the global markets also tanked. However, by the end of the day, the US markets had closed slightly flattish to negative, but the damage was already done. But more interestingly, what has happened today is that the Nifty, again, the open interest has changed. So open interest yesterday, which had crossed 1, is now back to 0.88. So this cat and mouse game of open interest changing every day is happening. And possibly that was one of the reasons that the market was not very strong today. Also, it could be a reason that it is consolidating. So it's very difficult, on a day-to-day basis to predict the market movement by 50, 100 points also. So that's very difficult. But having said that, my expectation was that the market should do much better than what it did today. Now let's see how it plays out tomorrow, because there is no major Q per se now. Again, the US futures as we speak are hugely positive, and our open interest is now at 0.88, which is neither here nor there. So let's see how markets play out. But having said that, even if one's view is slightly wrong, right? What matters is whether your system can make money for you or not. So today, even though my view was slightly bullish and the markets actually went down, my system still ensured that I will end at a decent green today. Simply because my system is delta neutral, and if one side options are taken out, then the other side options kick in, and they try to stabilize the situation, unless of course it is a very violent move on either side. In that case, of course, the options suffer and the stop losses are taken out on both sides. Otherwise, the system is robust enough to handle situations which are not very extreme on both sides. If the situation is extreme on one side, the system handles it very beautifully. But if the situation is extreme on both the sides, I mean, if there is too much of movement, then the system will not be able to handle that well. But for that, there are various other hedges which I employ. So that being said, the moot point is that even today it was a good day, although March is still in red. But having said that, I just wanted to share with all of you that predicting markets on a day-to-day basis by 50, 100 points is very, very difficult. It's actually not even required. So we should refrain from that, and we should see the larger picture of how things are going. So let's see how the day has panned out. And so this is how we opened today. If you see, we opened at somewhere around 22,550 odd, and then suddenly this fall came, right? So this was kind of not expected, and it took away all the puts along with it. And this is where I squared off all my positions, puts and calls, because it was in decent money. And then the recovery. So this recovery would have also tested the calls to a large extent. So I had squared off a lot of my positions over here. So I wasn't carrying the risk, because I had seen that there was hardly any premiums left in calls, and if there was a counter move which came over here, then the calls will also spike up. So I took covered most of my position somewhere over here, and that helped me a lot, except Bank Nifty, because Bank Nifty is so far away that the monthly options are so far away that these small moves actually don't make a difference. Over there, the call and put both were all right. Now coming to the Nifty daily chart, this is how the daily chart looks like. So we had gone and tested this support level of 22,640 2 days back. Yesterday we did not go there. Today we did not go there. So let's see if we can break this. Then we are looking at a upside. If not, then this was it. But my sense probably would be that as I had said, that when the up moves come, they come very sharply like this. The down moves they come very sharply like this. Then this is the consolidation phase that you're seeing over here. Again, the down moves 800,000 800,000 points gone in 4-5 trading session. Again the up move, 800,000 points covered. Again the consolidation. So from here, whether we'll go up or down is very difficult to predict, and I will not even try to venture doing that. But there are levels that we should look at. So if we close about 22,600, then we are looking at a next resistance at somewhere around 23,000. If that breaks, then 24,200 and so on. While on the way down, 21,780 is the support, and then the budget day support of 21,200 odd. So this is how the setup is for Nifty. Now let us look at how the open interest has played out today. So there are about 4.45 crore calls that got added today versus 1 crore of puts, and that has completely skewed the open interest again back to 20 crore calls versus 17.8 crore puts. Now this is 37 crore contracts. I believe another 8-10 crore contracts will be added tomorrow. So let's see which side does it go. Will calls become 30 crores and put 20 crores, then the market perhaps will go down. But if they remain in similar range, let's say 20 crores each, 22-23 crores each side, then the market will be again in a range. So let's see how it plays out. Now this is how the straddle premium is. We opened at 173, which yesterday when I had said it was at 200, it was good, but we gave up a lot of that at the open. And then from there we have actually gone decade further. So we are at 133, which is nothing great. Now if you open at 110 tomorrow, then of course it's going to be like tough going, but let's see how it goes, because 110 points basically means that Nifty movement is projected to be at 110 points for the day, which is if it stays in that range, it's fine. Otherwise, this premium might not be sufficient. Yeah, so this is how the sectoral indices have performed today. Now, if you look at IT was the worst performer, down by minus 2.8%, and then media, mid cap, etc. was down. Even small cap was down. So Nifty was slightly down. And the sectors that actually did well today was auto, pharma, financial services, banks. So banks have recovered a lot after yesterday's fiasco of IndusInd. So a lot of banks pitched in over there. Now this is how the indices are fared over the 52-week highs. Now Nifty is 14.5 as I had said yesterday, but IT is now gone below 20. So IT is now minus 21.3. So IT was the worst hit today. And again, small cap and Nifty next are closer to 25%. So that's not a good sign. Mid caps are still holding fine at 20. So let's see if there is a more correction, then these all indices are going to go towards 25-30% correction. Now let us look at how the IT index has performed. Now if you look at last 1 year returns of IT index, it has actually gone negative. So last 1 year return of IT index is minus 2.3%. And however, last 5 year returns of IT index are still fine, because we had seen this huge rally of 2021 wherein IT index had just zoomed post COVID. So that is helping a lot in the 5 year number. But if you see from that particular peak, it's not been much. So like for example, a couple of stocks like Infosys, etc. are back to their 4 year levels which they had seen. So IT index has been okay over the last 5 years, primarily because of this rally. But over the last 1 year, as you can see, there is no money to be made. Now coming to the heat map, this is how the heat map looks like. And accident for the day happened in Infosys, like it happened in IndusInd yesterday. Wipro or TechM all down 2 to 3%. And banking has done well. As I had said, HDFC Bank is up, Kotak Bank is up, and so on. In terms of Nifty next, this is how it looks like. So Lodha was down minus 4.3, Naukri down minus 2.7, LTIM minus 3.4, Geo Finance was up 3%, Adani Green 2.7, Indigo was up 1.7, and Divi's was up plus 2.1. Now coming to what are the important cues globally, how things are stacked up. Let us have a look at that as well. So if you look at the global cues, they look all right as we speak, because Nasdaq futures are up, Dow futures are up 0.5%. Bitcoin is all right. US dollar index is behaving well at 103. Oil is below 70, which is good. So rest all the cues are fine. Gold is fine, silver is fine, 10-year US 10-year is fine. So one important data point today is that US CPI inflation numbers are going to come, right? So that is going to be important. So market is penciling in about 2.9 to 3% inflation. So let's see how that goes today. Uh, Now coming to one interesting data point that I saw today, which is that equity fund inflows, the mutual fund inflows in equity funds is kind of come down. Now, if you look at these bar charts, these are the ones that indicate the flow of money into the mutual fund. So, like for example, if you look at the February data, it's at about 29,000 crores. The month before that, it was almost 39,000 crores, 41,000 crores month before that. November was 35,000 crores. So as you can see that mutual fund data shows that the money coming into mutual funds is slowing down. Now this is typical retail behavior. Whenever the markets are at a high, for example in September, October, you are seeing retailers putting in huge amounts of money, and as in when the correction has set in, retailers started withdrawing. The same thing that you see over here. If you look at somewhere around March 23, let me just see where that is. Yeah, somewhere around here, 20,000, and March 23 was 20,000, and Feb 23 was 15,000. So you can see that during the peak, the money comes in, and March 23 when the rally, the next bull run started, people were putting in the least amount. For example, April 23 was just 6,000, May was just 3,000. So this is when the bull runs actually started, and a lot of people missed out on, right? And from there it has just gone up. Now people, as you can see, have put in maximum money in October, September, but now when the market is going down, they are reducing their exposure, right? So this is typical retail behavior, that whenever the market goes down, try not to put too much money. My argument is slightly different. My argument is that whenever the markets are down, it's a good time to add to your mutual fund portfolio. So this is not the time to not add. So a lot of indices are down 25-30%. So this is the time to build very strong portfolios for future. So if anyone is interested in their mutual fund portfolio, they can fill the Google form below and leave their contact details. I shall contact them and I shall help them make a good mutual fund portfolio, solid mutual fund portfolio. So the point remains that this is the time to make your portfolios, not reduce the SIP, which we are seeing happen in a typical retail panic, so to say. Because now if the markets don't go anywhere from here for the next 6 months, 12 months, you will see these flows actually halving, and actually that will be the best time to invest in mutual funds. So having said that, that's the update for today. Nothing sort of a day. Markets were in a range. They did not do too much, and there was some decay that happened in the options as well. So for tomorrow, there's not too much premiums left. So let's hope that we don't get a wild day tomorrow. And that's it from me now. If you like the video, please do subscribe to the channel. Please share it with your friends. And I shall see you tomorrow with another update on the expiry and how the day went. Till then, take care. Bye-bye.